All right, welcome back inside our proactive newsroom. And joining me now is Stacey Morris. She is the head of energy research at VettaFi. And Stacey, it's great to see you again. How are you?
Doing well, Steve. Thanks for having me.
Yeah, good to have you back. And just before we sort of get into the meat of what you want to talk about, maybe you can just remind us a bit about what Midstream is and how these companies are making money.
Yeah, so I appreciate not everyone knows what midstream is, but I like to think of midstream as pipeline companies and really kind of the logistics arms of the energy space. I like to call it shipping and handling, but people should think about it as really the middlemen that are getting energy from supply points to demand points. And so what's unique about midstream is that these are companies that are largely providing services for a fee. So they don't have the same commodity price exposure that you typically see in the energy space from companies like oil and gas producers. So being those kind of middlemen, handling the logistics, earning fees, that generally results in much more stable cash flows than other sectors of energy.
So, Stacey, what are you seeing in sort of the space right now, as we sort of head towards the end of 2025 and into 2026?
Yeah, so I think first and foremost, midstream companies continue to execute well in terms of generating free cash flow. That's been a big theme for this space for a number of years. And with that free cash flow, companies are growing their dividends, they're buying back equity, and really doing what they should be doing. So the free cash flow theme is very much still intact for this space. The other kind of tailwind that we see is expectations for natural gas demand growth. So US LNG or liquefied natural gas export capacity is set to grow 80% between now and 2030. And that's just based on projects that are under construction. So we actually see probably upside to that capacity over the coming months as we see more projects move forward. So that's really a big step change in demand just from LNG exports. And then at the same time, you also have US electricity demand growing for the first time in a long time. And we think that's going to require more natural gas as well. So these midstream companies that transport natural gas, that process it into usable form, they're going to see kind of growth opportunities across the value chain as demand for natural gas grows, and as we also see more U.S. production of natural gas. And it's also, not something that's unique to the U.S. We're seeing that in Canada as well. So that's been, I think, a key tailwind for this space and something that we continue to watch as companies announce more and more projects on the natural gas side. The other thing I'll just mention is that we see tailwinds from the regulatory side. The regulatory environment has been friendlier under the new administration. That's helping with those LNG projects moving forward. We're seeing companies announce that they're looking at pipeline of projects again in the Northeast, which has historically been a difficult area to get natural gas pipelines done. And then there were some provisions of the One Big Beautiful Bill Act that have kind of positive tax consequences for some of the midstream C corps. So all together, seeing some tailwinds in the space from free cash flow, dividend growth, the expectation for natural gas demand and production growth, and then also just a friendlier kind of regulatory backdrop.
Okay, that's sort of on the North American side. What about Europe? And I know there's a lot of investors in Europe that are looking at potentially midstream and what that could do for them.
That's right. So the Alerian Midstream Energy Dividend UCITS ETF is essentially an index of US and Canadian midstream corporations. But I think there's a couple different ways that European investors may look to use this space. First, people can use it for more defensive energy exposure. As we talked about, fee-based business models and stable cash flows. There tends to be a little more insulation from commodity price volatility with midstream versus other segments of the energy space. You can also use midstream for real asset exposure. This is a space that tends to do well when we're in periods of inflation. And often these companies are providing services under long-term contracts with inflation adjustments built into them. We also see people use this space for income. You'll find more income from midstream than a broad market index. And then I think for European investors in particular, it can be a nice complement to a holding like Total, BP, Shell, Eni. If you look at performance for broad energy or the European majors since the end of 2022, the space just really hasn't done that much. And so midstream has actually, performed pretty well over that period. So I think for investors who are maybe looking to try and diversify some of those exposures or play energy in a maybe more cautious or conservative way, that could be something interesting to look at.
All right, it's going to be an interesting time for the rest of this year and obviously into next year as well. Exciting times as well for people to look at this particular space. So, Stacey, thanks so much. Good to see you again, and we'll talk soon.
Thanks so much, Steve. Appreciate it.
There's Stacey Morris. She is the head of energy research at VettaFi.